Andrew Kaip, co-head of mining research for BMO Capital Markets, joins me now on the sidelines of the BMO Metals and Mining Conference. Andrew, good to catch up with you.
Yeah, definitely.
Pretty good sentiment here at the conference. 2016, obviously a good year for the miners, but people are walking around with smiles.
They are. You know, we have record attendance. Institutional investors are up, broadly speaking, 30% year over year. So there's a lot of momentum in this sector right now.
Well, gold price up about 9% last time I checked from the start of the year. How do you see the gold forecast here?
That's an interesting question. You know, when you think about some of the drivers that are moving gold in the up year to date, they're really predicated on whether the United States and the new administration has the capacity to make the structural changes and implement the strategies that they're planning. The reflation trade, so to speak, or what that administration wants to do in the United States has come across a couple of hiccups. And so my perception of where the price of gold is right now is really, it's being propped up by that uncertainty. Uncertainty on whether there will be the types of rate hikes that we were expecting at the beginning of the year and whether they will materialize and whether that administration can actually deliver what they say they're going to deliver.
So too soon to tell?
Too soon to tell from our perspective. Trump is a very energetic individual, and it's quite conceivable that next week we could wake up and he's showing very strong momentum on his policies. And I would interpret that to be a short-term weakness in the price of gold. So we're sitting on the sidelines right now and monitoring. I think it is too soon to say gold is moving higher.
So Andrew, what would you say is helping silver? Is it really just following gold's lead here? Because I mean, silver's up close to, anywhere between 12 to 15% from the start of the year here. So, what's topping silver?
Yeah, so in a rising market, there's really two things. One, silver can and has historically done better than gold as gold rises, and particularly when we see market enthusiasm. The best way to think of silver is just a beta play on gold. But remember that with policies that are going to be constructive on development in the United States, silver then has another thing going for that, and that's the demand that is required, because it is effectively it has base metal-like qualities that it is also a building block of the economy. It's a metal demand in that regard.
What's your latest forecast on silver? Do you have a target range?
Longer term, we're up over $20, but for this year, both for silver and gold, we're currently below where we are. So gold, I believe we're at $11.75 for an average for this year. Thus, you can understand a bit of the caution that we have. And then silver, we're in the $17 range.
Now, Andrew, we're at the conference, BMO Metals and Mining. A lot of mergers and acquisitions deals get made at this conference. Do you think we'll see a lot more M&A activity this year?
You know what? There's certainly reasons why we could see it. There's certainly an interest in it taking place, I would say, both on the corporates as well as from the investors. I think there's a willingness to consider it after several years of very low M&A activity within the space. But the conditions are going to have to be right. And they're going to have to be supportive for CEOs to actually be able to come out and try to suggest that their deal that they're proposing is going to be in the best interest of shareholders. It's going to take one brave mining company to start the process, and if they deliver a good acquisition, one that investors can see is creating value, then I think we will see it. I think, the best way to put it is, the question was asked by myself with the CEO of Barrick, and his response was very much in tune with what I would expect. He said they would look at M&A if they could really see an opportunity, or they would be interested in M&A if they could really see an opportunity where their cost-cutting efforts at their own mine could be translated to that target and deliver material savings on that operational cost structure, which would really provide the incentive to make that acquisition and show to investors that it would be accretive.
Andrew Kaip, thank you so much for your thoughts. It's always a pleasure speaking with you. Thanks for stopping by. And thanks for watching our coverage here from the BMO Metals and Mining Conference. We'll have much more for you, so be sure to stay tuned to Kitco.com.